How much do I need to start investing in gold? The better question is, how much of my specific investment capital should I allocate to gold? In this two-part video series, I will discuss some gold investing strategies from popular and successful investors. As the old adage goes, success leaves clues. See the link in the video description to read the full article. Also, I will share 2 sound gold investing options, each with their own unique advantages. Be sure to watch the entire video so you don't miss them. How much to invest in gold when first starting out will vary from person to person, of course. Also, the larger economic climate will dictate how much at any one time a person should be allocating to gold. For inflation hedging and portfolio diversification, the standard rule is an allocation of 10%. For a more expert perspective, let's find out how much experienced, forward-looking investors allocate to gold. With decades of experience managing their own investment capital, as well as their clients, this provides better proof of concept and success. In no particular order, first on the list is Kyle Bass. Kyle Bass is an American investor and founder of Conservation Equity Management and Hayman Capital Management. He has publicly stated that he has allocated around 10% of his portfolio to gold as a hedge against currency debasement and political risk. Nicknamed the Prophet of Wall Street Doom, Bass is best known for successfully predicting and effectively betting against the U.S. subprime mortgage crisis of 2008 by purchasing credit default swaps on subprime securities, which in turn increased in value when the real estate bubble burst. When asked by Michael Lewis, the author of The Big Short and Moneyball, what do you tell your mother when she asks you, where do I put my money? Bass simply said, guns and gold. Gold is considered Kyle Bass's favorite investment, and given his aptitude for making market predictions, it may be wise to follow his lead. The next investor to provide insights on how much I need to start investing in gold is billionaire investor John Paulson. John Paulson is known for making a fortune by betting against subprime mortgages during the 2008 financial crisis. He has been a vocal supporter of gold as a defensive asset and has allocated up to 30% of his funds to gold in the past. Paulson states that gold has the potential to go parabolic due to its limited supply and increased demand when quantitative easing restarts from the U.S. Central Bank. It is worth noting that when the Federal Reserve has pivoted in the past, as they often do when there is a systematic break in the economy, this does not coincide with a reemergence of a bull market. History has repeatedly shown that the equity market is in a major downturn or correction when the Federal Reserve starts cutting aggressively. Short-term and long bond yields are in rapid flux as well. This is where gold comes in as a portfolio stabilizer. Gold is easy to buy and sell, has a track record of returns over the long term, and is valued by investors all over the world. Ray Dalio, the American billionaire investor, hedge fund manager, and founder of Bridgewater Associates, has 8% of his portfolio invested in gold, or at least that's what his all-weather portfolio indicates. Bridgewater's Pure Alpha Fund avoided much of the 2008 stock market implosion for its investors. Dalio went long on treasury bonds, shorted the US dollar, and bought gold and other commodities. As a massive proponent of diversification outside the standard publicly traded assets, Dalio stated in 2023 that buying gold is a key factor in minimizing risk. He considers other hedges like Bitcoin to be too volatile and prefers gold as a safe haven and risk mitigation asset. As quoted on Chris Williamson's podcast, if you look internationally, gold is, for central banks, the 3rd highest reserve asset. Versus dollars, then euros, then gold, and then Japanese yen. And central bankers are buying gold and they're not buying bonds. And gold is timeless and universal. Dalio sees gold as a non-debt-based form of currency. It is worth noting that many of these famous and wealthy investors on this list were able to strategically position themselves and their clients' capital to benefit from the Great Recession crisis of 2008. The ability to see where the puck is headed, as Wayne Gretzky once put it, is key to minimizing risk as well as profiting from it. Therefore, it's no coincidence that the majority of these successful and forward-looking investors are advocates of gold ownership. Rick Rule, the president and CEO of Sprott US Holdings, is a legendary resource investor. He has recommended that investors hold up to 10% of their portfolio in gold and other precious metals. He has also stated that he personally holds up to 20% of his portfolio in physical gold. Rule said precious metals related investments comprise of less than 0.5% of all savings in investment asset classes in the United States. The 4-decade mean market share is 2%. He states that the combination of negative real interest rates, quantitative easing, waning US dollar confidence, federal liabilities like the national debt, and deficits will propel gold's investment share back to the 4-decade mean of 2%. Rule states, if that's correct, demand for precious metals related investments will increase fourfold, which is precisely what I think is going to happen. Commodities experts like Rick Rule understand that education is key and that relying on the collective knowledge of experts saves time and financial setbacks. When starting on the path of gold investing, working with a credible and trustworthy precious metals vendor is key. Finding an established gold investment company that understands the many fluctuations of the gold markets and the numerous variables affecting its price will save much time and hassle. Working with an established company can guide you as to how much of your specific savings you should allocate to get started investing in gold. Armed with experience and institutional knowledge, these companies can assist you with logical price entry points, positioning, and dollar cost averaging so you can maximize your gold investment. Gold IRAs provide additional benefits compared to merely buying gold from a local dealer. These companies can provide access to competitive prices, transparency, price match guarantees, a sound buyback policy, reliable customer service, and robust security and protection of your precious metals. See the links in the video description to find the right gold IRA company for you. Among notable mentions is Paul Tudor Jones, the billionaire hedge manager and founder of Tudor Investment Corporation, has publicly stated that he has invested around 5% of his portfolio in gold as a hedge against inflation and currency devaluation. He also owns other hedges, such as Bitcoin as well. Another notable mention is technology mogul Peter Thiel. Characteristic of forward-looking investors and seeing where the puck is going, in August of 2021, Palantir Technologies, co-founded by technology billionaire Peter Thiel and CEO Alex Karp, stockpiled 50.7 million in gold bars. Stated that year the software company would accept precious metals as well as Bitcoin as a form of payment for its services. Palantir's chief technology officer, Shram Sankar, stated that accepting non-traditional forms of payment reflects more of a worldview, adding, "You have to be prepared for a future with more black swan events." A common objection to holding gold is the opportunity cost of gaining yields elsewhere, such as bonds or high-quality equities. Monetary Metals is a gold investment company that unlocks the productivity of gold by offering a yield on gold paid in gold. Monetary Metals delivers interest on gold through the company's gold fixed income investment products, which aim to provide a fixed return with low risk of loss. This provides investors exposure to gold's unique attributes, plus a real yield that grows total gold ounces held by the investor. To learn more about Monetary Metals investment products and get started today, see the link in the video description. In the next video, we will continue our list of successful gold investors to better help you know how much you need to start investing in gold. Please like and share if you enjoyed this video content. Also, subscribe to our channel so you never miss a video. If you are a serious investor with at least $100K in retirement savings and want to take advantage of the best gold prices, see the link in the video description to attend a free gold educational webinar hosted by Augusta Precious Metals. Thank you for watching.